good morning. You've tuned into ET Now, and this is Buy Now, Sell Now with me, Karunya Rao. Let's kickstart the show by quickly taking a look at what the markets are doing. There's a very sharp rebound seen on the street. All the key indices and benchmarks, broader markets, they've all made a comeback in today's trading session, with Nifty gaining in the excess of 150 points, firmly above 14,400. SENSEX is triple-digit higher in trade, right now up 560 points, 49,123 is where it's perched at. Broader markets exactly mirroring the move seen on the benchmark index. As far as sectoral performers are concerned, all of them firmly in the green. You have Nifty Metals up 1.6%, PSU banks are up 2.5%, Nifty Realty is up 4.6%. Banking stocks are looking very firm. In fact, there are just 4 stocks on the benchmark Nifty 50 which are declining in trade. All of them are firmly in the green. Grasim is up 4.3%, Tata Motors up 4%, Bajaj Twins up 3% each. Do remember, tomorrow is the Q3 report card for both of these companies, and ahead of that, they're rallying in trade. L&T, HDFC Limited, OMGC, SBI Life, Coal India, all of these are gaining quite smartly in trade. Let's also understand which are some stocks to keep on your radar as far as the BNSN stock cloud is concerned. Let's quickly pull up the BNSN stock cloud then to understand which are the stocks to keep on your radar and on your watch list in today's session. First up, Mindtree, they delivered their numbers last evening. The stock looking healthy in trade. There's Apollo Hospitals and they've launched a QIP. And of course, it's an ET Now news break that has been confirmed once again. Apollo Hospitals definitely a stock to watch out for. There's L&T Finance, they've announced a rights issue. The stock is looking very resilient in trade. RBL Bank, another mid-cap lender that's looking healthy. They've announced that Vishweer Ahuja has been reappointed as the MD and CEO of the bank for another 3 years, from June 21 to June 24. India Mart in the limelight on the back of Q3 report card as well as their fundraising plans. And you also have Trident Limited, a small cap textile company buzzing away in trade. They've unveiled Vision 2025 for their strategy for growth. India Cements is the signature of all eyes today. The Damani brothers have further raised the stake in the company. Cholamandalam Investment, another stock to watch out for. They've seen some rejig of the top deck, and that's why the stock is also very much in the limelight. Tata Motors once again back in action, looking very firm in trade. CLSA says building confidence of turnaround, especially in JLR business, could lead to valuation re-rating. And finally, you have Coal India gaining quite smartly. Credit Suisse maintains outperform. Higher international coal prices are likely to support rising e-auction, and they see good triggers for profitability for the company going ahead.
All right, time to talk technicals and fundamentals with our guests. Kunal Bothra and Rajesh Agarwal are both with us. Good morning, gents. Thanks for taking out the time as always. Kunal, coming to you first. Technically, what's the chart on the Nifty looking like today? One day of good, positive US futures action, and our market seems to be in a much better mood. How are you reading into things, and what are your calls for today?
Good morning, Varun. I think, the last 3 months and the patterns for the last 3 months clearly define one very important trend, that the corrections have lasted for just a couple of days, and the trends, the uptrends have have lasted for a longer duration of time. Now, these are classical signals which you look at when you try and go through those traditional technical analysis of the indices. We look at indicators, we look at price patterns, but we give more emphasis towards what's happening to the prices, because that's where the market generally takes cues and directions from. So I think in that regards, I would be of the belief that we are into a strong uptrend. The global markets are very supportive. So you have 1 or 2 days of odd consolidation which happens in the Asian markets or in the US markets, but then there is a very strong comeback into these indices, and that also helps and gives a fillip to our markets. The best part about our market so far has been the composition of market internals. So you have so many large caps which tends to participate at every new fresh trend on the upside. So like for example, last 3 months you didn't have Reliance participating. ITC was more or less like a market mover, but now you have Reliance which is moving up higher. UPL which has now shown signs of potential breakout. ITC has also been a new contender on in terms of breakout as well. So in overall, I believe that these are classical signals of bullish market signals. Now I would suggest 2 buy calls. at current levels. The first one is a buy on Bajaj Auto. I for one believe that the stock is heading towards a breakout on the short term as well as on the medium term charts, forming a bullish flag pattern on the hourly time frame. So would expect a rally on 50 and stoppers to be kept at 35.50 mark. And the second would be a buy on Bajaj Finance. Now this is a more of a contra buy. The stock has been down from 5,300 to 4,800ish kind of levels, but I think at current levels it's completed a bullish divergence on indicators. Prices have hit back to some key moving average support as well. So I believe after a couple of days of sideways price action, the stock should pick up pace yet again. So this is a high risk trade, a contra buy on Bajaj Finance, expecting that the 4,700 bottom with the stock had tested a couple of days back. That should be a short-term bottom in place for the stock and should head back towards hitting its previous high of 5,300 levels. So buy on Bajaj Finance, targets of 5,300, stop loss 4,650.
Okay, thanks for that, Kunal. Quite an interesting selection of stocks. Hi, Rajesh. Good morning. What about you? High risk and low risk calls for our viewers?
Good morning. As far as calls for medium risk goes, I would go for 2 medium risk calls depending on the market condition, because although they are fundamentally very sound, but as we move towards the budget space and the quarterly number space, things are going to be volatile. But still, I would recommend these 2 stocks for medium to long term. First one would be Grasim. If you look at the company, both the division VSF and Caustics are doing very well. The volumes are almost on the pre-COVID levels. There is a strong VSF demand from China as well, and the fertilizer space is also doing well. We are not to forget this company has the subsidiary of these companies, Ultratech and ABCL, both are doing very well. It has a holding of around 11%. In Vodafone, and we have seen Vodafone doing well on the bourses. So again, the valuations are going to be added to these numbers, and capacity addition VSF is also going to add. Valuations at around 20-22 times earnings are quite reasonable, and we believe for a medium term one can buy with a target of 1,150 rupees. The other one would be from the chemical space. This is the Balaji Amines. We have seen robust demand from the divisions they cater, the pharma and agro industry they cater. 77% of the revenue comes from these 2 industries. They have ramped up their production, and the PLI scheme is going to help. Margins are on a higher side. The numbers in the second quarter have been quite good, and we believe that even in the third quarter, the performance would be repeated. And not to forget the kind of scenario from China, which has helped the chemical industries to grow well. We believe that this stock can be bought with a target of medium-term target of 1,300 rupees. So we have a buy call in these 2 stocks.
Okay, thanks Rajesh for that. Slipping into a break here, but request both of you gentlemen to stay on. When we come back, we'll address our viewer queries. Welcome back. You're still watching Buy Now, Sell Now, and it's time to bring on board some of our viewer queries. First up is an email from Raghav Datta. He's based in Chandigarh, and he is currently looking to invest in Asian Paints. Wants to understand if it's a good time to enter. Kunal, first on the technicals for Asian Paints. The stock has, in the last 1 week, 10 days, come off quite significantly. About 250 rupees drop has been witnessed on the counter. Does this provide a good opportunity to enter into it, or should he wait for a further decline perhaps?
Good opportunity to invest into Asian Paints. I think if it's purely from a short-term trading view, then from 2008-50, where the stock started to show signs of correction, till 2005-75, where it tested yesterday, I think it's a reasonable 300-point correction. You can't ask for more in a stock like Asian Paints. So I think at this 10% correction, the stock looks fairly attractive. It's come back to some good support zones as well. So I think it's at a strong support level. Indicators are oversold. So on all of those time frames, I believe Asian Paints is a good buy. So I think the viewer is looking to purchase this from a longer term view. It's a good entry point.
Okay, Kunal likes it. It's corrected enough in his view. Rajesh, how about you? And just, while we're talking about paints, even Indigo Paints IPO is right around the corner, and metrics seem to be competing with Asian Paints on a lot of fronts. So would you also look at that?
See, no doubt Asian Paint is a fundamentally very sound company with not only a leadership position in decorative paints, they are planning to enter into relative segments like bathroom and kitchen fittings, furniture and all, and this will be an integrated play on the entire decorative segment as such. Market share is also high, and they are going to gain market share from unorganized players after this Corona thing or the GST implementation and this. Balance sheet is very strong. We have seen gradual recovery in decorative paints in mid-tier segment, mid-tier to tier 3 cities. But still, there are two negative points which I feel at this point of time should be taken into consideration. One, crude prices are steadily going up, which is going to affect their margins in the medium term. Second, the valuations are on a higher side at around 65 times FY23 earnings. So I would say not only one should wait for a further correction, maybe around 2400 would be a good level to enter for a medium to long term.
Okay, thanks for that. So you're of the view that it could perhaps correct some more before you enter. Let's move on to our next query. Karan has written to us. He bought Info Edge during the recent highs. However, the price has been trailing. He's lost around 1,000 rupees a share. Should I hold or book losses? Kunal, what would your advice be?
So, one can repeat the name of the stock?
Yeah, Info Edge. Viewers bought at the recent high points and now he's 1,000 rupees out of the money. And he's basically asking if he should stay invested or book a loss and get out. So technically, what do you think he should do?
See, I think there are two time frame matches over here. So one is that this happens. This is a tendency where many of the stocks which have rallied up significantly higher, they tend to attract a lot of buyers and I would say late entrants into the stock. But I've always been an advocate that whenever you are identifying any kind of a trend, especially into a name like InfoEdge or India Mart or such other names, which have moved up significantly higher, and then they tend to gain up traction, is that you wait for those periods of sideways corrections or price corrections as a good entry point. Now, if you look at the charts for InfoEdge particularly, the stock is still above its 50-day moving average. Ideally, a 50-day moving average is a very good or a reasonably good entry point from a longer term view, because that's where the stocks tend to go complete their mean reversion processes. The indicators from overbought territories, they come back to a normal kind of a zone, and it generally is a precursor that a new trend could begin again for stock prices. So I think since you bought at higher levels, the stock is already down some 800,000 odd points. I would suggest that wait for maybe another 300 or 400 points. I think at 4,500, that's a good level where you can look to average, bring your cost price lower. So your weighted average has to be more than 50%. So if you can do a slightly higher average at those 4,500 levels, then I believe that you can stand a good chance of coming out in profits over the medium term to long term. So I would suggest a hold on InfoEdge, but an average or a further average at 4,500-ish kind of levels.
Okay. Rajesh, how about the fundamentals of InfoEdge? Do you like where the company is headed?
See, the company has got a very good business model. Around 70% of the standalone revenue comes from Naukri.com, and that's doing very well. In the post-COVID area, we have seen hiring going up, not only in IT industry, but other verticals also, and that's good news for Naukri. The company holds around 17% stake in Zomato, and every time a news of Zomato IPO comes, we see there are spikes in prices of the stock. Zomato is also doing well. From last 2-3 months, the numbers of delivery orders have gone up reasonably well. They have started charging for deliveries, and that's going to do well. But having said that, the valuations are highly overstretched at even these levels after the correction. So I would not suggest any averaging at this cost. Maybe an average of around another 10% cut might give an opportunity to average. But I would say any upside in this stock should be taken as an opportunity to exit for investors.
Okay, all right, Rajesh. Thanks for that. Let's move on to query number 3. Lokesh Rathore writes to us from Udaipur. He wants to invest in DLF and asks us if it's a good time to enter or should he wait for some correction to come by, given that the stock has run up quite a bit recently. Kunal, where do you think it's headed in terms of its technicals, and if you could suggest a good entry point as well for our viewer?
DLF is poised at a level, Karnya, where the stock is completing a breakout of almost a 10-year consolidation. It's in typical technical in terms, we call it as a rounding bottom pattern, and the more the number of years the stock tries to consolidate and completes this pattern, the more stronger is the potential breakout. So DLF on the stock price on the charts has those classic ingredients which are set up on the charts for itself on the monthly time frame. Now, typically, in terms of short terms, if you're looking to time it perfectly, then I believe that the best strategy over here is to try and buy the first tranche of your investments at the current market price, because the stock has already confirmed a breakout on the long-term charts, and then use any kind of correction. So if you see a correction of at least 10%, 270 approximately is the next first support level for DLF, and then the next major support, which is approximately at 250 to 55 zone. So you can keep both these levels as points where you can look to average further if the stock provides you that kind of an opportunity. But I think looking at the charts on the longer term view, looking at how the real estate stocks have shown performance in the last 6 months to 9 months, I for one believe that DLF should see a strong potential upside from current levels. So buy on dips is what I would recommend, starting from current levels.
Okay, buy on dip strategy from Kunal. Rajesh, how about you? What's your view on a DLF?
Always maintain that realty as a sector is not favorable for retail investors as such, because of a lot of issues like inventory, corporate governance, and other things. But still, if somebody wants to invest, DLF can be a good bet at this point of time. One, because real estate is doing well after the COVID thing. We have seen a lot of government initiatives coming in. Interest rates are all-time low. Pre-booking sales have gone up. The company has planned new launches, and the best part is they have reduced the debt. That was 52 billion debt as of September. I think things are reasonable. One can buy at these levels for maybe a 10% upside from the current market price.
Okay. Next query is from Arjun Singh of Mumbai. He wants to invest in Piramal Enterprises at the current price. Kunal, this one's had quite a good run since March, and even of late, it's fared quite well, barring few odd days like yesterday. Do you think one can enter now?
I think, frankly, Varun, that Piramal Enterprises underperformed because it's been one of the few, large cap, creamy kind of a stock in the category in which it is trading. So I think it's surprising to see that Piramal Enterprise has underperformed major of its peers. But then when I look at the very recent charts, and especially the monthly charts, this is the first time that Piramal Enterprise on stock prices is showing signs of a potential breakout. Now there are multiple chart patterns. It's an inverse head and shoulder pattern. You can call it as a cup and handle kind of a pattern. And this has been augured very well with the support of indicators as well. So as a pure technical setup, there is a strong possibility that Piramal Enterprise can try and cover up the underperformance as compared to many of its other peers. So I think in that aspect, I believe at 1600, 1605, where the stock is currently trading, I think it's an attractive buy. And if the stock actually, the potential of the stock actually plays out, then you can see an upside of almost 25 to 30% as well from current levels.
Okay, all right. Thanks for that. Rajesh, what is your view on Piramal Enterprises, especially given that there's a new development for the company? They've been finalized as the key bidder for DHFL and they'll be acquiring it soon. How do you see the fundamentals playing out?
The fundamentals are strong, no doubt about this company. They are a good player in the pharma space. The CDMO business is doing well. Hospital generics business is doing well. Order book in the CDMO space is quite strong, and the retail lending book is also good. Valuations are reasonable, and now the news of DHFL being acquired at a reasonable valuation is also positive. I think a medium term target of 1750 is quite reasonable on this stock. Any dip should be taken as an opportunity to add to the position.
Okay, well, there you have it, our expert's view as far as Piramal Enterprises goes. Next up is an email from Abhay Birch. He's in Mumbai and he bought 100 shares of ICICI Lombard at 1300 rupees. Wants to understand if he should stay put or book his profits. Decent gains coming in for Abhay here. He bought at 1300. Right now the stock is perched at 1550 levels. Kunal, do you think it's a better idea to stay put?
I think it's definitely a better idea to stay invested. I think it's just restarted its uptrend. So when you look at the longer term charts for ICICI Lombard, it's not that the stock has gone through very sharp phases of correction, but in fact what the stock has shown is classical signs of trends. By classical signs of trend, I mean when the stock goes into a rally, it goes into very subtle periods of uptrend and then goes into those phases of consolidation rather than a sharp price correction. So these are classical signals which are available for a stock like ICICI Lombard, and I think at current lows of 1545, 1550 levels as well, I think it's an attractive buy or a hold. So if you're not in for a shorter term kind of a time frame, you're not looking out for trading, then I believe I would recommend the viewer to stay invested. You already have created a buffer of almost 200 points, 240 points from your entry price. So I would suggest a hold on ICICI Lombard and expecting that this uptrend would continue and probably the stock may hit even the 1650 to 1700 mark as well.
Okay, and Rajesh, fundamentally, anything you'd like to flag off about ICICI Lombard?
See, not only ICICI Lombard, we are very bullish on the entire insurance sector as a space, and for a longer term horizon. By longer term, I mean somebody having a horizon of 3 to 4 years should definitely add any depths in the sector to add to the stock. ICICI Lombard is a very good play on general insurance business. The market share is above 7%. There is a high under penetration in the insurance market, and that gives huge opportunity for business expansion. They have very good conservative underwriting, and the balance sheet is very strong. Valuations are reasonable, and we believe that the group business is going to rise, the volumes are going to increase, and not to forget the premiums are on an uptick that would again add to the numbers. So this is a very good buy at these levels. Even somebody holding can continue to hold unless he has got a trading mindset. For a longer term, we would say add on every dips.
Okay, a big thank you to both our experts for joining in. Great to get perspective from you. Time for a quick break. We'll be back shortly. Stay tuned. Hi, welcome back to ET Now here, and you're watching Buy Now, Sell Now. Yesterday, we told you first, and it's confirmed, Apollo Hospital has launched a 2,500 crore QIP, fixed a floor price of 2,508.58 paise. According to sources, proceeds to be used for the investment in the Kolkata hospital. My colleague Vivek, who broke this story, now joins in with more.
Well, it's an ET Now news break that has been confirmed in a filing to the exchanges. Apollo Hospital has said that yes, it is indeed looking to raise funds via the QIP route. Remember earlier, ET Now had reported that Apollo Hospitals was looking to raise funds via the qualified institutional placement route. We had told you about how the company was looking to raise close to 1,500 crore rupees. We also told you that the QIP issue, the base price or the price range would be at a slight discount of close to 5 to 7% to the closing price of today. And along those lines, exactly, Apollo Hospitals has informed the exchanges that yes, it is indeed looking to raise funds via the QIP route. The base price has been set, or the floor price has been set at 2,508 rupees a share. We also understand that JP Morgan and Bank of America are the bankers for this particular fundraising. We understand again that the proceeds are most likely going to be used for investment in the Kolkata hospital, and we understand 400 crores out of the total proceeds would be used for that. We also understand that the remaining of the proceeds most likely would be used for reducing debt, and if you recall, the net consolidated debt of Apollo Hospitals has fallen to 2,830 crore rupees in the second quarter from 3,520 crore rupees in the first quarter. Again, this is a confirmation of an ET Now newsbreak. It will be interesting to see. We understand from our sources that the demand is quite robust. GIC is said to be one of the largest investors. It will be interesting to see the demand and how exactly the stock reacts to this particular piece of information.
Thanks, Vivek, for getting this information. Since you're here, we also want to address another mid-cap stock that's soaring in trade. I'm talking about India Cements. Billionaire R.K. Damani and his brother Gopi Kishan Damani have held 21.1% stake in India Cements, and it has been increased from the previous holding of 20.4% 3 months ago. Vivek, can you tell us a bit more about this development?
South-based cement maker India Cements is in focus again. It is in focus because one of India's most famous and most successful investor, Radha Kishan Damani, continues to increase his stake in this particular name. We've been constantly highlighting about how Radha Kishan Damani and his brother Gopi Kishan Damani have increased their stake consistently over the past year and a half. Earlier, remember, at the end of the June 2019 quarter, they didn't have any stake. However, they started their process of purchasing shares in the September 2019 quarter, a 1.3% stake that was raised to 4.7% stake at the end of December 2019 quarter. At the end of the March 2020 quarter is when the maximum of the stake purchase was done. They held close to 20% stake at the end of March 2020 quarter. And now if you're talking about the end of September 2020 quarter, a 20.4% stake that's now been increased to slightly over 21.1% stake. It's going to be very interesting to see whether they continue to increase the stake further, because that may have implications as far as the share is concerned in terms of any open offers that could be triggered. As of now, it does not appear as though there would be an open offer that would be triggered, given the fact that the promoter holding continues to remain at 26%. This is going to be a very important development to track in case of India Cement. Now, the other thing is that India Cement, it continues to be one of those companies that steadily progressed, continues to be one of those companies that, from 1989, a 1.3 million ton capacity, now almost 16 million ton, one of the strongest brands as far as South Indian market is concerned, and also relatively attractively valued when you compare it to some of the other mid-cap cement peers. So overall, very interesting development. It will be interesting to see how the stock reacts on back of this further developing story as far as Damani increasing stake in this particular company.
Okay, thanks for that, Vivek. Of course, two very important stories that he just did for us. But let's switch gears towards banking and HDFC Bank. And an ET report suggests that there has been now a concrete plan drawn up to fix the HDFC Bank power outage issue, which has actually been hurting the digital platform, the transactions, and also causing quite a stir. So my colleague Saloni Shukla from the Economic Times is now with us. Hi, Saloni. Thanks for joining in. Do you have some details as to exactly what has been proposed and the timelines for the execution of fixing these bugs that are currently hitting the digital banking of HDFC?
Yeah, hi. Thanks for taking this. What we are picking up is that there is a short-term strategy and a long-term strategy. So the short-term strategy includes a review exercise which the bank has started, which is expected to get over in the next 10 to 12 weeks. They have submitted a plan pertaining to this to the regulator. That is what we pick up. And we are also hearing that the business sanctions on HDFC Bank could be lifted in phases if the regulator is agreeable to the idea. They also have a long-term strategy which will go on for about 18 months. And, in that they have a lot of items like changing of the entire digital architectural design, inclusion of cloud. That's the long-term strategy. But the short-term strategy is that the ban on business sanctions is lifted. That is what they want. Analysts fear that if this spills beyond June of 2021, it could start impacting their profits because they have almost more than 30% share of the credit card market. So while they have grown 32% in terms of new addition at the end of December quarter, they will be hit in Q4. So that is what they are working on right now. So we will keep you posted as and when the development comes. But as of now, they are just immediately focused on trying to lift the ban. Back to you.
All right. Thanks so much for joining us with that update. But moving right on, as fuel prices skyrocket, we caught up with HPCL's CMD, Mr. M.K. Surana, and tried to understand how the demand patterns are faring. Listen in.
April to December month data. So we are at around 89% of the same period last year. So April to December demand is around 11.8% lower than what we had last year. If you see petrol, it is also almost a similar thing, around 12% lesser than the last year. Now, if the growth we see, it is in the December month, we had the positive growth on petrol and slightly a shade lower than the last December in diesel. LPG had been positive, ATF is still to pick up, and the overall, if you really see on the bottom line basis, so we are slightly positive compared to what we were last year. As far as industrial goods are concerned, that is also around the same 12.5% lesser than April to December last year. So overall, we can say that we are around 89 to 90% of the 3 quarters demand last year. Now, this is on the back of the fact that the first 2 quarters were quite low. So to that extent, I must say, and I repeat again, that the quarter 3 recovery was good. Now, I said probably last time also that the further demand of the diesel, the one of the trigger would be the harvesting season, which will come. And that should bring in some fresh demand in diesel. And the further part of it is the industrial pickup, which is happening. May not be to 100% extent, but it is. And the construction sector, which is also picked up with some hesitancy here and there, depending on some of the COVID regulations, which the people have to follow. But otherwise, I think that compared to where we were in the first quarter of this year, I think we are much better off with a lot of hopes coming in with the vaccine. Now the inoculation already starting just 2 days back. And we hope that the thing should be getting normalized sooner than what we thought earlier.
Okay, time for a quick break here. We'll be back shortly. Stay with us. Hi, welcome back to Buy Now, Sell Now. As we wind down the show, let's bring up the quiz question and answer on your screens. The capital goods sector saw the highest order flow from which one of these segments in Q3 of FY21? That would be the quarter that just went by. The options were A, the railways, B, oil and gas, C, water, or D, power T&D. And the correct answer is railways. We have a few people who got it right. In fact, just one. Rajesh Ashar, congratulations to you, sir. A hearty one at that. We encourage you to keep participating in our quiz. And if you do get it right, we'll feature your name on our channel every day at 11:45. And on that note, completely timed out here in Buy Now, Sell Now. So thanks so much for watching. Keep it with ET Now.